Stock Charts Trading. Today I want to just kind of go over what's been happening for the last month and kind of just catch up and review what I've been doing on Stock Charts Trading YouTube. And in the beginning, it was all kind of technical analysis. It was support, resistance. It was how to get into the trade, how to get out of the trade, how to make trend lines, how to do all the things that need to do to look at the charts. Then we started talking about Fibonacci. We started talking about the wolf pattern. We talked about head and shoulders patterns. We talked about harmonic patterns. We talked about ascending triangles, patterns that you would see within these linear regression channels. Then we started talking about cup and handle, head and shoulders patterns, range boxes, even the Elliott wave. After that, we started to give you places to buy good quality stocks and what to think about when buying IPOs. So that way you can invest low and have targets up above, while continuing to sharpen up our technical analysis, harmonic patterns, wolf patterns, different things like that, how to use them the best for your trading system. Elliott wave, ABC pattern. What do you look at when you see the charts? But then I started talking about currency wars. I started to talk about the Bitcoin, soybeans. I started talking about SPY being at an all-time high. I talked about food shortages. I talked about double tops, double bottoms, and where to take targets if the market moves down. I talked about natural gas also as a commodity. We're all awed by Warren Buffett and what he does and how he does things, and we want to be a billionaire also. But what is Warren Buffett doing to become a billionaire? And right now, Warren Buffett has $130 billion in cash. He also has $563 million in gold. He sold out of over $7 million in bank stocks. With all of these things going on, it makes me question, why is he seemingly going so defensive, right? If we're in the best economy ever and the market's going up, 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 and everything's great, then he seems to be hedging pretty hard because you don't make any money when you're in cash. I'm not trying to say the end is near for the stock market, even though I sound like a doomer gloomer. But on one of my early videos, 17-year stock market cycles, I showed how market goes up on average for about 6 years. And when market goes down, it only goes down for about a year and a half. It was a great video if you want to find out more, right next to trading currencies, the dinar. The only thing is we didn't really go down for a year and a half. We only really went down for about 45 days. But what if we're just in a bigger one of these sideways channels, bouncing off support 3 times and hitting resistance twice before breaking through? So what if this pattern is exactly what we're seeing here, just on a larger scale? Then we would assume that this support level is where price is going to come back to based on results. We've already seen the resistance of this SPY line here. Price came up into it, and now we have a bearish engulfing candle right up against these 2 resistance levels. So I'm going to go through each one of the trades I'm in, and I'm going to show you how I'm going to trade them in the future. So first of all, I'm going to go through FAZ, SPXU, TECS, and UVXY, which is the VIX. The reason I want to show you these verses is because the trading strategy to enter me into this trade is a little different. So as you can see, we came off these highs. We made a down channel, broke out right here. And this is on the 20-year weeklies chart. So again, I'm looking at it from a big perspective. I can see definitely we clearly broke out of this resistance line. And so now I'm going to take it down to a 30-30. And here we are, a 30-day, 30-minute chart. And here you can see that big diagonal line coming through. And we broke out, making higher highs and higher lows. Now I put the LRC channel on there, and you can see that it's going in a downtrend, but we just broke out of this line. We have higher highs, higher lows. So I can't use that trade strategy. So what strategy can I do? That's right, first over. So you have a support here, you have resistance here, put your Fibonacci 50 retracement right here, and now you're looking for an entry point. So you can take off of your tops, you can use these tops, you can draw a diagonal line down. Here's 75-degree angle. Maybe you use a 70-degree angle, maybe a 65-degree angle. Where you go out more, obviously you're going to lose your lower entry point. So based on resistance and support, I can use this line here as resistance. I can bring it down against this line as resistance. And now this 75-degree angle keeps me tight and close against price. So as soon as I break these 2 lines, I can enter into the trade. Maybe you're looking at this a little differently. You see that here's resistance. Maybe you look at this a little differently. See, here's resistance. You can see here's resistance, here's support. So if price comes down to this $23, then you would enter into the trade. And that's a good trading place. My first target would be this 161 Fibonacci extension level around $40, which you can see is resistance back here. So that is my first trade. My next trade is TECS. And so you can see that we have resistance. We broke out of that resistance right here. It's the same trade. You have the highs, you have the lows, you put the Fibonacci on there. You have support right in here off of these candlesticks. You came down into this area. I bought right here at $13. And so this is a bearish 3 times long what the QQQ is. So as Q is really high and it's coming down, this will be doing the inverse, which is going up against that. The reason I like trading this is because the options are so stinking low because you're trading the QQQ at $13 rather than trading at $283. And again, here's the inverse. We can see that it was going up and it was bouncing off support. It broke that support level, came back into that Fibonacci and get ready to go lower. So again, for me, TECS is a great place to invest for the upside movement and control of the QQQ at such a cheap price. I'm looking for my first target to be around $18. Exactly like TECS, SPXU is the inverse of the XPY. So it's going down, 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 breaks out of that resistance. You use the lows, you use the highs. This is called the first over trade. Why? Because you're in a downtrend channel. After your first breakout, that's the first pullback, which means it's really your best first place to enter into the trade, right? Elliott wave, leg 1, Elliott wave, leg 2 pullback, Elliott wave take off into leg 3. At worst case scenario, this is an ABCD pattern and you can make this same range box that you have here upward, which runs around your 160 range Fibonacci. Or you can consider this an ABCD pattern and duplicate the range box. And sure enough, you'd run into your 161 Fibonacci extension. All of this stuff is the same. And then if we look back over here, we can see that this support and resistance, you have a gap right here, also lines up with this 161 Fibonacci area. Now, the last of the 4 first over trades is FAZ, and you can see that we had a breakout right here. I TikToked about it. I said buy at around $13.50, and yep, I missed it. Price went down lower, almost to $12. That's okay, because we know bouncing off of support, buy more. This is a long-term trade, so we didn't mind getting in 2 or 3 times. Even though I'm already in this trade twice, I'm looking to put more capital to work here. So you do the same thing. You have resistance, resistance. You break out of that resistance. You take from these highs and these lows and you put a Fibonacci on it. Depending if you like to use the 38 or if you like to wait till the 50 Fibonacci, that's up to you. Remember, you can take your line tool also and just draw it down. And this is giving us about a 65-degree angle, which is a great place for a breakout to enter into the trade. Again, it's already touched the 50% retracement. Where's my target? That's right. The Fibonacci 161 tells me that 1550 is a resistance level on the Fibonacci's. If we look back here, we would see that there is a ton of support right through here and then resistance right here. Seems like a good place to take some profits. Now, those were the 4 on the first over trade, because once price comes up into this upper 160 level Fibonacci extension, then we should have the LRC turning, giving us that upward trend. What do I mean? Well, like with corn, we can see that we were in a downward channel. And while we're in that downward channel, it did not give me the right entry points first over or bouncing off the bottom of the LRC line. And it didn't even really give me a bottom channel support line to bounce off of. So when I took this trade, I lost a little bit of money and time. Then we bottomed out, making triple bottom, so I bought a little bit more. Today, corn's up around 10%. And as you can see, we're making this topping pattern right here. But really what I'd like to show you is this cup and handle pattern that we're creating, meaning that we should get a breakout of corn all the way up to, that's right, I'm going to put a range box on you from the highs to the lows. That takes us up to $14. So now that we have the LRC on there, here's the highs. We're making a little bit of a handle here here for that cup and handle. So for me, I'm waiting for price to come down into this lower LRC so that I can get into another trade on corn. Next is AGQ. We have an uptrend on the LRC, and the rest of these trades will be shown by uptrends on the LRC. So we came down and touched the 70 line on the LRC. I bought a trade there. I got a little aggressive. It happens. I'm sorry. I got in a little high at around 56, adding to my first position. But I pulled my trend line down and it was at a 50-degree angle. I broke that trend line, so I thought, go ahead and get in. If it comes back down to this lower LRC, I'll get in again. I'm building a long-term position on these. Okay, here we are on Boyle. We had a long-term downtrend, broke out of the downtrend, put my Fibonacci from these lows up into these highs, came down into the 50. I liked it because I had support right here. I thought this was a great entry price. And then it fell all the way down, giving us a double bottom, which was great. I just wasn't ready to place another trade right there. Once price started to shoot up, the LRC started to turn with price going up. And so I started adding to my long-term position. Every time it came down into the LRC, I bought there. I bought a little aggressive here at the bottom of a flag pattern. Price came back down into the lower LRC and I bought there. I did the same thing on soybean, and I did the same thing on the bearish dollar, UDN. Every time it came into the lower LRC, I bought. Every time it came into my upper LRC, I scaled out around 10%. So those are my two trades. The first over trade, once it breaks the channel, look for a pullback and enter into the trade on a leg 2. The next trade that I'm doing is called Go With. It is entering in at the bottom of the LRC and exiting at the top. As of right now, I'm only going to be trading these 10 ETFs because I like to keep my mind and my trading simple. I hope you ring the bell, subscribe, so that way when I have a trade that I'm putting on with these, I will show you the entry points, I will show you the options that I'm going to use, I'll show you the targets, I'll show you the timing of everything that I'm going to do, and it's all free. Why? Because I want you to become a great trader. I don't want you to struggle. I want you to be able to learn these things, trade for yourself, and make yourself a lot of money. You can thank me someday. Give me a high five when we're all sitting in heaven drinking beers. Until next time.